My name is AkeemFX, and for this video today we'll be learning how to analyze the charts as a beginner trader or even intermediate trader, because even intermediate traders don't know how to truly analyze market trend and market reversals. So let's get straight into it, bro. Alright, so as you guys can see, this is Euro to NZD, and right now on my charts is just this trade that I took last week, and I think we made over $1,400. I'm gonna post the results right here. $1,500 on Euro to NZD after NFP came out. This is initially a 1 to 4 setup. However, we came out at 1 to 3 because I didn't want to pay swap fees leading to next week. Leading to the market close for next week. But anyways, let's do the breakdown right now. So when analyzing trends, the first thing you want to do is go to the higher time frame. So your higher time frames are normally the daily, the weekly, and the 4 hour. As a swing trader, these are the levels that you normally stick to. Intraday traders, they normally stick to the daily 4 hour and 50 minutes, and probably 1 hour, 2 hour, and 3 hour. And then scalpers normally stick to the 4 hour, 1 hour, 15 minutes, and even the 5 minutes. But anyways, let me get straight into it. So first thing you want to do is you want to identify the trend of the market. Let me show you guys what makes an uptrend and what makes a downtrend. So what you want to notice is on the charts, if you're looking for an uptrend in the market, the first thing you want to be seeing is higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. That's just purely what you're looking for in the market. So this would be your higher high, then this would be your higher low, then this would be your higher high again, this would be your, why are they coming up, higher low. So that's what you want to look for in the market. So let me copy it so it's more perfect for you guys. Alright, so these are your higher highs and your higher lows. So first thing I want to say is the market is not gonna always look perfect like this. It's not gonna always be in a perfect trend where you can just automatically draw a trend line and say, okay, at the moment it hits the trend line, I'm gonna say no. It's not gonna always be in perfect lines like this. However, I'm just showing you guys higher highs and higher lows. So this is what you would call an uptrend right now. Why? Because the market is making higher highs and higher lows. So only thing you would want to look for in this trend is normally buy. That's all you're looking for. You'd want to go for a long position in this trend. You can potentially look for scalping positions in a sell trade. However, your overall trend is bullish. The main thing you should be looking for is buy. Why? That put the overall trend in your direction, and it makes you more prone to win a trade and more less likely to lose a trade. Why? Because the entire trend is bullish. So when you're in a trend like this, you normally look for buys. I'm not saying you can't scalp and take a sell. However, you're more prone to lose when you take sell in a bullish trend than in a bearish trend. In a bearish trend, you can easily win. Why? Because the entire trend or the overall trend is going down. So if you want to look for a potential sell trade in this trend, you would normally wait for something what we call a change of character. And this is also in smart money concept where they call it a change of character. This, you notice you're making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. What you'd call a change of character is when the market break that previous higher low, retest, and then continue to push down. That's what you call a change of character. That's when the entire sentiment of the trend switch from bullish, meaning going up, meaning going up, and then switch to bearish, meaning going down. So bullish is up and bearish is down. Bullish, you want to buy. Bearish, you want to sell. That's all you're looking for in the market. So let me show you a more perfect example. And wait, before I continue, when you're in a bearish trend, what you're looking for is lower highs. I didn't do that perfectly, but you'll see. And lower lows. So that's all you're looking for. You're looking for lower highs and lower lows. So it's just the opposite of a bullish trend. the opposite of a bullish trend is a bearish trend. So that's all. There's one more trend pattern that you should know. There's only three trend patterns. You have bullish, you have bearish, and then you have consolidation. Consolidation trend is when the market is just fluctuating, like it's not making any higher highs, no higher lows, no higher highs, no higher lows. It's just in one direction, meaning it's just going across. That's what you call a consolidation trend. Consolidation trends, you can potentially scalp on consolidation trend, but you're more prone to lose. During these times, I prefer to just stay out of the market. You can still trade support and resistance with these trends. However, you're more prone to lose depending on what time frame the consolidation is happening. Now, let me show you guys a better example on the chart. So, on Euro to NZD, the first thing you can notice, you can see we're on the weekly time frame. What do you guys notice? If you notice, we're in an uptrend. You have a higher high right here, you have a higher low from the previous low, higher high, higher low, higher high, higher low. This didn't get to create a higher high, almost created an equal low, but then it broke structure and came back down. So now you have a structure shift, which is called a change of character. So now, to make it more perfect for you guys, you put your HH, so this is your higher high, your HL, higher low, HH, higher high, HL, higher low. I'm not sure why it's messing up my thing, but you guys get the idea. So that's what you call an uptrend. So now, and again, bullish trend if you guys want to use that term instead, which is the correct term. So this is what you call a bullish trend when it's making higher highs and higher lows. One of the easiest ways you can trade a bullish trend, because I'm going to show you guys how you can easily trade these trends as well, is trend line. So one of these strategies that most traders use, not most, but a lot of traders use this strategy is called trend line. So trend line is basically when a trend is going bullish or even bearish, and you draw a line up and you want it to touch at least 3 points. So what makes a high probability trend line is when that trend line touches at least 3 points. So if you notice, how many points did this trend line touch? So you have 1 right here, so that's 1. You have 2 right here, and you have 3. So this would make a high probability trend line right now, because we have 3 touches. That means 3 times when price came to this trend line, it rejected. So you know that every single trader that trades trend line is going to look for a buy, because we're in a bullish trend, to potentially increase in their profits, or for the market, are hoping that, anticipating that the market will go up, because they're buying in this trend and they're above the trend line. What you call a breakout in the trend line is when the market potentially breaks that trend line, then retests. So what you call a breakout is probably something like this. If you notice, you were in an uptrend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then you get an equal high, then you get a break underneath that trend line. So what you wait for when trading trend line is you wait for a retest of that trend line, then to potentially go short, because now you're looking, you know that the market sentiment has now switched to bearish. So you're looking for a sell in the market because it's broken out of the trend line. Now it's underneath the trend line. If it's above the trend line, you're looking for buys. If it's underneath the trend line, now you're looking for sells. And that's just the basics of trend line strategy. So I'm going to show you a perfect example. Again, this is what I trade now. So I trade support and resistance, and this is my support and resistance strategy. So let's see, because it doesn't matter what, let me tell you guys this as well, it doesn't matter what strategy you trade, trust me, there's gonna always be setups in the market. That's just the honest truth. And I did that on Euro to USD, I think, last week. This is a trade I took as well. This is a trend line based, not trend line, support and resistance based trade. And let me show you guys the entire breakdown. Let me just delete it off my charts. When trading support and resistance, what you're looking for in the market is areas that price has rejected from previously. Basically the same thing like trend line. However, now you're getting an area of interest, which is called the AOI, if you want to use that acronym. So what you're looking for is places where the market has rejected multiple times, or you can stick to at least 3 times. That's what makes a high probability support and resistance area. So if you notice on Euro to USD, this would make a high probability resistance area. Why? Price has rejected from this level once, right there, twice, 3 times, 4 times. So you know that when price came to this level, it has rejected from this level 4 times. So the next time price comes at this level, you're going to potentially look for either a buy or a sell. So if it's under the resistance, if it's under the support, it becomes resistance. If it's above the support or resistance, it becomes support. So if your area of interest is, let me show you a more perfect example. If you have this as your area of interest, if it's above, it's considered as support. If it's underneath, it's considered as resistance, because you're resisting that level. And if it's above, you want it to give some support to go higher. So that's all you're looking for in the market. So now let me show you guys the trade we took. So the trade we took, if you notice, when it came to that level, it rejected, broke over that level, so now it becomes support. Then you take a buy. If you notice that, you take a buy. Fine, you get some profits. Back underneath the level, price didn't reject it, it broke through, came back to the level, became support, came back, became support again. Then price finally broke through that level, and when it retests that level, it becomes resistance. That's all you're looking for in the market. And I feel like support and resistance is one of the simplest strategies out there. I'm not saying it's the holy grail of trading. No strategy is the holy grail. You're gonna have losses. You just have to know how to maintain those losses so your losses are not bigger than your profits. So let me show you now. So this trade we took, the moment price reaches this level, I took a sell off that area of interest, which is a resistance trade. Initially, I was looking to take profits somewhere down here for the liquidity for buy side liquidity to be grabbed, but price ended up didn't reach that level because it's Friday. After NFP came out, the market just kind of went slow after that. After NFP came out and we got that push, that nice push, the market was just slow after that. So I'm like, you know what, I'm finished for the week. We took the trade on Euro to NZD and Euro to USD, and we made profits. So that's all we need. The next thing that I always look for as well when I'm trading support and resistance, you have to look for, when you have your levels, what I'd say is my edge in the market is when that level has the 50 EMA as well. So if you notice this blue line, this is called the 50 EMA right here. So what I did, I just add the 50 EMA to my chart. You can just go to the indicator tab on trading view, you type in EMA, add it to your chart, and then you go to inputs, change the length to 50, and that's all, and you add the 50 EMA to your chart. So if you notice, price retested that 50 EMA as well. That adds confluence to my resistance trade. And also, there's a next thing about support and resistance, which is called round psychological level. My round psychological level for here, right here, was 1.09 thousand right there. That's your round psychological level. So if you notice, price came to that round psychological level, the market didn't break above it, and then instantly as NFP came out, price rejected. And that's all you're looking for in your market with support and resistance. So that's simple what support and resistance is, what trend line is, and how you can identify market structure. I'm gonna go way more in depth with this in our next video, but I wanted to put out a video this week because I didn't put one last week for you guys. But from now on, a video is gonna come every single Saturday, where I go through the market with you guys, and I post all my trades on my Instagram page. If I don't get to post on YouTube, you can see them on my Instagram page, which is AkeemFX. So follow me there if you want to. And there's so many, I'd say there's a lot of things on my Instagram page that can be beneficial to you. So really check out my Instagram page. You can look at my story. I documented the day I started trading. Not from the day I started trading, but I documented from years now, probably a year and a few months I've been documenting in my Instagram history. So you can look at the stories, my highlights and everything. And trust me, there's a lot more to come. So all I say to you guys, stay tuned. This is just the basic how you can identify trends in the market, and that's it. Have a good trading week, guys. I'm AkeemFX, and I'm out.